Hey everybody, Tony here with the first lesson for the week of the 23rd and the 24th of April. For this lesson, I want to talk about. I talked about this on stream the other day, and I've talked about this a few times now, quite a few times. But I really want to hammer home things to look for when you're trying to identify trend, whether you're in a position looking to get in a position, and trying to identify, potential entries, but more importantly, when you're in a position, how to identify when to exit the remaining of your position if you're, trading options and trading multiple contracts of something. This does not apply to anybody that's trading a single contract of anything. Like I always say, if you're trading a single contract of anything, whatever it may be, you always have to take that money off the table when the opportunity presents itself, and be strict with that. But this is for people that are trading multiple contracts, and a few tips that you can use and that I use when I'm, letting things ride and looking to exit that remainder of my position. If we look at this SPY chart, if you guys remember. If anybody's in my Discord, if you guys remember, we took some SPY puts. I believe this was the 21st, around 10 o'clock, 10:30. We had grabbed some SPY puts as it was about to fill this gap from pre-market. We had gapped up, made our move, got real heavy at the top, failed our EMAs, and the flow is in our favor. We took some puts into this gap right around here at around 10:45, and they did very, very well for us. Now, if you took those puts and you were looking and trying to identify, okay, I scaled out, I took my profit. Now, where or what do I have to look for when looking to exit the rest? Are we in a clear trend? Are we kind of just chopping away? Are we in congestion? Or are we able to identify areas that we can look for to exit those? So, like I always talk about, what I personally look for, say this is the 5-minute chart. Say I'm entering on a 5-minute chart. As soon as I enter that position, almost always, I will then switch to the 10-minute, and I'll pull that up here in a second. But if we look at this 5-minute chart, what I personally use on a 5, 10, whatever time frame I'm looking at is my 9 and 20 EMA. Those are extremely powerful following trend. If you're in a downtrend like we were here, you can see extremely powerful resistance areas. How many times on this 5-minute time frame do we test the 9 and reject? We test the 9, reject, over and over. Even once that 9's broken, the reason I use the 20 as well as kind of my last ditch get out area is because even if we break through the 5 or the 9 like we did on the 5-minute, we then reject the 20. We're flirting with the 9 but rejecting the 20. Flirting with the 9, breaking above, rejecting the 20. So on and so forth. You can see, into the end of this day, we continuously either are rejecting the 9 or the 20 on the 5-minute. But what I will do is I will make sure I'm looking at a higher time frame. And that higher time frame I like to watch is the 10-minute, like most of you know if you're in my Discord. You can see we fill this gap, and we're not even relatively close to the 9 really, for a while. Eventually here at around, what time is this, 1:30, 2 o'clock, we break above the 9, don't get anywhere near our 20, reject back down, and so on and so forth. We continue down. And this is into the next day then even. I had overnighted these puts. Into the next day, we fail the 20 and the 9 again, okay? Reject the 9, we're just riding the 9 down all day. Eventually, finally, what time is this? This is 2:30, 3 o'clock. We finally break above the 20 and confirm above, but immediately get smacked back down. But I'm using that 10-minute time frame almost always once I enter something. And something else I'm using is what I call complementary time frames. So complementary time frames for me are ones that I'm not always constantly watching, but ones I will check occasionally. So when I'm in a position. So I use the 1 hour and the 4 hour. So if we go to the 1 hour on SPY, This was that gap fill play we took. What on this 1 hour chart could have gave you any indication to exit this position as you're writing it down? We are not even remotely close to a 9 or 20 EMA, not even within a ballpark range of that. So if you're looking at something like this complementary time frame, this 1 hour or a 4 hour chart, we're not even close. There's nothing that's indicating any sort of reversal strength, or even in here we're just stagnant. We have a little bit of a micro move that you can see on a lower time frame, but we're nowhere even remotely close to breaking above that 9, let alone the 20. So and then we can look at the 4 hour. 4 hour is much worse. But I use those complementary time frames. I'll occasionally switch to those, especially the 1 hour throughout the day. As I'm watching the 10-minute to see, I just want to get an idea, where my EMA is at. Is there any underlying on those complementary time frames? But the biggest thing for me, guys, is that 9 and that 20. When I'm looking to exit the remainder of my position and let a position run, I am looking for a break above the 9 and the 20 almost always. And that's where I'll be like, okay, we may be exhausted. We may be in for a dead cat bounce, a reversal, whatever it may be. Okay, I'm going to watch this here. We're above the 20. That doesn't mean I'm immediately exiting, but I'm watching, do we get smacked back down immediately like we did here? Or do we, put in a higher low and start to reverse? So those are the things I'm looking for. The complementary time frames, my EMAs, my 3, 5, and 10, especially the 10-minute once I'm in a position. But those are really the tools that are going to allow you to stay in a trade and ride something out. But again, this only applies to somebody that's trading multiple contracts. You absolutely have to take money off the table when you are only trading a single contract and compound those gains to eventually get to a point where, okay, you can grab multiple SPY contracts, you can grab multiple Apple contracts, whatever you trade, whatever you prefer. So, but I did want to touch on this again because I just can't stress how important it is, because these trend days are where we make serious money. These trend days are, extremely profitable, but we need to know what we're looking for. So I hope this lesson helps, guys. If you have any questions, as always, please reach out to me, and I will talk to you in the next lesson. Thank you.